Hello and welcome to our presentation on tax advantaged investments. So this is the EIS and SEIS schemes. My name is Ben Aspinall. I work for Ecovis Wingrave Yeats. We're a full service firm of accountants, auditors and tax advisors. We're part of Ecovis International, a network of like-minded firms catering for large international businesses through to SMEs and owner-managed businesses. And we have legal firms, corporate finance, M&A firms, and of course, audit, accounting, tax firms in the network. We've worked with Enterprise Ireland for perhaps just a little bit more than a decade, working with their clients, helping them enter the UK market, familiarising themselves with the compliance environment here and the general lay of the land, and assisting them with any ongoing compliance requirements they might want some assistance with. So today we're talking about the EIS SEIS. So I'm joined by my colleague James MacDonald, who is heads up our personal tax offering here, but also is our resident EIS SEIS expert, if I can call you that, James. And then I'll at that point probably appropriate to pass over to you, as you're going to do the bulk of the presenting here. If anyone watching this has any questions, our information's at the end of this presentation. You can also get in touch with your Enterprise Ireland account manager, and they'd be happy to make an introduction to us. We do no obligations calls. You can take up an hour of our time or more just to ask a few questions about any of these topics that we're talking about on this series of webinars that we've produced for Enterprise Ireland. We enjoy chatting to you guys and finding out what you're interested in and what you're looking to achieve in the UK. And we're happy to have that chat for no obligation from your side. So yeah, that's it from me. And James, I'll leave it to you. I'm in control of the slides, so just shout when you want me to scroll through.
Thanks very much indeed, Ben, and hello to those of you watching the seminar webinar, I should say, really. But as Ben said, we're going to be talking about tax-advantaged investments, essentially the enterprise investment scheme and its smaller cousin, the seed enterprise investment scheme, which is aimed at very small and nascent startup businesses. So anyway, I suppose, Ben, if we can move the slides on. And so starting off, for the very early stage companies, the seed enterprise investment scheme is the preferred investment route, and the tax advantages for individual investors on this, particularly UK resident investors, are quite generous, and but that doesn't mean that they are restricted to UK investors. Anyone around the whether they're resident in the UK or outside can invest in the both the seed enterprise investment scheme and the enterprise investment scheme. And it should be, I know it covers it later in the slide presentation, but just to emphasize that the reliefs are aimed at the investors rather than at the companies, although the companies have to meet the qualifying criteria. So I would start off with the seed enterprise investment scheme qualifying criteria, and it's listed on this slide you have in front of you. So I won't read through it all, but you'll see from this that it is very much geared to the sort of absolute startup end of the market. But the nice thing about both the seed enterprise and investment scheme and the enterprise investment scheme is that they are geared for essentially seamless follow-on. So a company that's starting up under the SEIS can then progress to the EIS with very little change for the process for getting tax relief and also getting revenue and customs approval. So Ben, if we can move to the next slide. So as I said, just reiterating there that the investors are not restricted to UK residents, but I have set out below the again the qualifying criteria for investors in a SEIS scheme, and there is some commonality, or a great deal of commonality, between that and the eligibility for investment in the EIS scheme. So there's holding periods. There are also qualifying trades, and as you'll see from this next slides that Ben has put up there, there are some excluded activities. Largely, these are considered to be ones where it's either asset-backed, or there are very limited situations in which the investor is likely to lose money. The main thing being that obviously as the title suggests, the scheme is intended to attract finance for enterprise rather than just businesses where you've got a reasonable chance of retaining your investment anyway, and hence the generous tax reliefs that attach to them. As I said at the bottom of the slide, these activities are not entirely excluded, but any company wishing to raise venture capital finance through the schemes mustn't dedicate more than 20% of its overall business to an excluded activity, although it doesn't disbar them altogether. Ben, if we can move on, thank you. Now, in order to qualify for either scheme, the company must have a permanent establishment in the UK. And again, there's Revenue and Customs through their venture capital schemes manual described that as a fixed place of business in this country in which the business is wholly or partly carried on. For the criteria listed below on this slide, and it's really a case of what is appropriate for the nature of the business. But you'll see also that if a company has an agent based in the UK, that can also qualify or meet the permanent establishment requirement, provided that agent genuinely acts on the company's behalf and has the ability to bind them in contract, carry on business essentially as though they were operating in this country. So the Seed Enterprise Investment Scheme, it's worth covering because, as I say, I realise that possibly our audience is likely to be more interested in the larger companies that qualify for the Enterprise Investment Scheme. But just to show the reliefs available on the SEIS, there's an income tax relief of up to 50%. That's you would need to have paid UK income tax of that amount in order to get it back. So it's not a tax credit that gets repaid. It needs to be tax that has been paid in the first instance. Capital gains tax relief. Now, obviously, again, this is assets that are liable to UK capital gains, and so there are situations, I should say, where non-residents can be liable to UK capital gains tax. A particular example is real property of whatever type. So that particular relief is not off limits to non-resident investors. And similarly, the loss relief can be claimed either against income or capital gains. And obviously, for a UK investor, the generally claiming the relief against income is far better, because the higher, at the moment anyway, the tax rates are higher. So the important element for both the EIS and the SEIS, particularly to attract investors, is that Revenue and Customs offer an advance assurance arrangement for both schemes. they will, they will review the criteria in relation to whatever plans a business might submit to them. Bears saying that the information that they will require in order to give advance assurance is quite comprehensive. But once that insurance is obtained, it's often very useful for a company to have that, because they can give potential investors the comfort that they will be attracting the generous tax reliefs that are available under both SEIS and EIS, and we recommend it. Because although it's optional, it's fundamental for many investors to understand that that there is some at least tax breaks on their initial investment of capital. Again, there are a couple of criteria around the shares in order to qualify for the reliefs. As I've said here, they must be new and full risk ordinary shares. So not preference shares or anything else that may have a better prospect of being redeemed in the event of a business not working out. They have to be subscribed for in full, and the subscription made in cash. Once shares are subscribed for, we would submit a compliance statement to Revenue and Customs, and they will then give permission or permission to the company to issue certificates to the investors, which they can then use to claim the tax relief. But it is quite a formalised process, and relief is not available unless those here there are SEIS 3, but equally EIS 3 certificates have been provided. So, as I said earlier, the tax reliefs, important to remember, are for the investors but not the company. But obviously the company will benefit from the investment, and it is an incentivized scheme. And important to note that the conditions to qualify for EIS relief must continue to be met for a full 3 years following the initial investment in the scheme. The other very important element is that there must be a risk to capital, which is to a certain extent why the businesses that are excluded as qualifying trades cannot get EIS relief, because there must be a reasonable chance, hopefully not, but a reasonable chance that the venture could fail. And the money raised through both EIS or SEIS subscription must be used for the qualifying activity within 3 years. So there is that window, but there is a requirement that the money is in fact used, and relief would be withdrawn if that isn't complied with. Again, as I mentioned earlier, the idea is that fundraising through SEIS would then follow on fairly straightforwardly and seamlessly to allow businesses to raise additional funding through the larger enterprise investment scheme. So the process for the enterprise investment scheme, again, very, very similar to SEIS, the same procedures in place for the investors to be able to claim the tax relief. The recent budget in the UK increased the actual size of the company, or the permitted size of the company, from next April. Currently, its asset value of up to 15 million UK pounds. That is to increase to 30 million UK pounds after April next year. and that's before obviously the funding is raised. And as you see with the
So
next
that's
note,
sorry, James, that's April 26th. That'll be from.
April
So just I'm
26
not
is
sure
close.
when Enterprise Ireland will put the
Yes.
webinar out. So I don't want to confuse
Yeah.
people if it goes in January. But so that'll be
Yeah.
from April 26th. Yeah.
Yes, thanks, Ben. Sorry, I should have made that clear. But yes, and then so gross asset maximum after issuing the shares, which hopefully would have had the EIS investment on them, is going to be increased to 35 million from April 2026. Knowledge intensive companies, that's quite strictly defined, but this is very much aimed at companies in the tech sector, and there are quite detailed considerations which not really within the scope of this webinar, but if there's a likelihood that the company may be of a nature that a lot of its certainly initial business is going to be through research and development, then worth talking to us about what criteria need to be met to qualify for that, because there are increased limits on the both the asset value of the company and the amounts that can be invested for knowledge intensive companies. So here, just a comparative chart between EIS and SEIS, and it essentially details the basic information for the companies and the qualifying size and criteria for each type of scheme. There's a few things around directors. I mean, with EIS, a salaried director would be excluded from investing, but for SEIS, again, the very startup companies, then salaried directors are not excluded from investing, provided that the company meets the other criteria. And given that EIS has actually been extended and expanded in the most recent budget, there's a sunset clause currently of 5th of April 2035, but so sometime in the future. But realistically, that's likely to well, certainly the scheme is available for the foreseeable future with that as a sort of a long stop date. And it's worth mentioning that this is for shares that are issued after that long stop date, so we are looking sometime in the future. This is a scheme that's certainly available now and likely to remain in place for the foreseeable. So in terms of how we can help, and we have assisted over the years a variety of various businesses to raise funding through both seed enterprise and enterprise investment scheme. So we can help with the process in seeking advice, advance assurance that the shares will qualify, dealing with the actual compliance statement, making sure that the investors get the certificates they require, and of course we can advise investors on their UK personal tax situation, or indeed if they are resident outside the UK, then our international network will similarly be able to advise investors in other jurisdictions.
Great. Thank you so much, James. That was great, really informative. Hopefully everyone found it the same. I guess, yeah, just to reiterate that if anyone does want to speak to us, they can get in touch with us here. You'll notice that I'm not Ruth, but James's details are here. Ruth is a tax partner who oversees all of our sort of tax offering, and James specialises within the EIS, SEIS, and personal tax. So it's worth getting in touch with one of James or Ruth, and we'd be happy to have a call, no charge, no obligation. Otherwise, as I said before, get in touch with your Enterprise Ireland client manager. They'd be happy to make an introduction for you, and we're look forward to hopefully speaking to some of you at some point in the future.
Yes,
Thanks very
thank
much.
you very much indeed.